Hi, I'm Vince Molinari, and welcome to The Nest, part of Climate Week New York City. And we have a spectacular guest. I'd love to tell you all about it. We'll jump in. All the great movement that ICE, the New York Stock Exchange, is doing. We have the pleasure of having Lynn Martin, who's the President and Chief Operating Officer of ICE Data Services, with us. Lynn, thank you so much for joining us today.
Thanks for having me, Vince. We're thrilled to be able to participate this year.
Well, look, if you could frame it up for us, I think many people around the world have heard of the New York Stock Exchange, know of it as being a leading and innovator and one of the biggest capital markets in the world. Many aren't familiar with the Intercontinental Exchange. Maybe you can explain that relationship.
Yeah, I'd be happy to, Vince. So, Intercontinental Exchange, also known as ICE, the way you should think of us is really an operator of networks. What I mean by that is we are a variety of global exchanges and global clearinghouses, which are nodes on that network. But importantly, through that network, there is a tremendous amount of market insights, which is the data services business that I have the privilege of running. New York Stock Exchange, as you point out, is probably one of our most notable exchanges, being the leader and innovator, particularly in the US capital markets. But we are the home of global energy markets, global interest rate markets, global equity indices, as well as a broad spectrum of data services. And finally, we've just recently added our mortgage services business with the acquisition of the Ellie Mae business, which just closed a couple of weeks ago.
Congratulations on that, and I have to bring forward the New York Stock Exchange being a member of the United Nations Sustainable Stock Exchange Initiative, being again in that leadership position, so thank you for that. And I'll tell you that.
Well, it's something that we believe in, so we're thrilled to do it.
Right, and that framing of thinking about ICE as that network and the nodes and really that connectivity and really the outcomes of the data streams that come from all that connectivity really gives us a full appreciation. Lynn, I wanted to jump in. There's been, from governments to market participants, a number of different initiatives that have gone on. How do we attack some of the climate issues? Mixed results, lots going on at the ICE itself with NYSE. Can you speak to us about some of that right now?
Yeah, and that question is super timely, as just this morning I saw that the European Commission brought forward some of their targets and raised their targets for emissions reduction by 2030 to 55% versus where it was previously. So it's such a timely question. When you think about the way markets and government mandates influence markets, there's got to be a marrying together of the aspirations of the government, the aspirations of market participants, and then the information that is available to help folks manage risk in markets. At ICE, our core mission is to really drive transparency. And when it comes to issues such as climate risk, transparency can have many different levels. As I mentioned, the business that I run, ICE Data Services, our focus is first in developing products that help folks understand what climate risks are in the market. Because it's great for us to be talking about global warming, super active hurricane season, wildfires in San Francisco and the rest of the West Coast. But if you can't marry that together with actionable insights, it's really challenging for a market participant to assess the effects of climate change on markets. The other area when we talk about transparency are some of the nodes I mentioned earlier, our listed markets. And what most folks don't realize is that we have been a market leader in carbon reduction trading since we acquired the Chicago Climate Exchange back in 2010. As I stand here today, more than 50 million tons of carbon trades through the ICE network on any given day. So that's 13 billion tons over the course of a year. When you marry that together with our global natural gas complex, we're the market leaders there. We've got the TTF benchmark, which is quickly emerging as the global benchmark, the JKM benchmark out in Asia, and the US natural gas markets. You can see that we're really an ecosystem which is helping to drive change both from a transparency perspective on the data side, but also allowing folks to very accurately express risk management opinions in our markets around the effects of climate change. and the modernization of the energy ecosystem.
Well, there was so much within that, Lynn, and I just have to touch on some of those key points when you talk about transparency, when you talk about
Yeah.
risk, and it's great to have the conversation around climate. What do we do about it? But without the data points, without the pieces to engineer product, right? Product that has muscle memory that we may be very familiar with, but now
Yeah.
has new wrappers associated with this evolution of ESG. Could you
Yeah.
talk a little bit more about where you see the trends going, what ICE is doing within those trends?
Yeah, specifically when it comes to climate risk in particular, one of the areas we're really focused on is what I talked about, transparency. Climate data is a very messy data set. Effects of hurricanes, wildfires, wind speed, heat, those different metrics. And it really is what led us to have a conversation with a fintech provider called Risk about 2 years ago to see how we can help bring to market a data set that looks at the effects of climate change and really what the impacts are in the market. So you fast forward to, I guess, January of this year, we announced an initiative which we're calling ICE Climate Risk. What that does is it takes our market leading valuations data associated with the US municipality market. As you well know, municipalities issue debt to finance their operations, both at the state and local levels. Also hospitals, schools issue debt to fund their operations. But importantly, the ability for those municipalities and jurisdictions to repay their debt is actually affected by climate change. Taking a real life example, as I'm sadly standing here talking to you today, is the issue of the wildfires going on the West Coast. This fintech partner that we've worked with has geospatial data measured in 100-meter increments. And because we have the treasure trove of data that we do on the financial side of the business, we're able to marry together individual municipal securities alongside what their climate risk score. For the West Coast, you're able to see that certain jurisdictions, certain municipalities are trading at the same levels in the market, despite the fact that certain municipalities have wildfire risk, others have less wildfire risk. So what do you think that actually means for those securities that are trading in the market? Should one be trading at a differential to the other to more accurately affect that risk? Similarly for Florida and the Gulf Coast, on the eve of yet another hurricane looking to hit the Gulf Coast, Superstorm Sally, what's the effect on it's going to be their ability to repay debt and finance hospital operations, things of that nature. Because we're able to stitch this all together, the fixed income trader in the market can now actually see on a security by security basis the effects of potential climate risk when they're making those trading decisions every day in the markets.
Well, and I think that's so spot on as we think more and more, what is the relationship of climate risk, our capital markets, our pricing, and to the extent that you brought that out, what should be at a premium because it has very low exposure? What should be perhaps at a discount because they have untold, perhaps, of unforeseen amounts of what was previously thought to be off balance sheet risk? So
absolutely, and it's not our job to offer an opinion there. Our job is to just show the data to the market in an understandable, accurate form that allows people to make more informed risk management decisions.
all about increasing the tools in the toolkit.
That's right.
So let's talk a little bit about standardization. We've seen
Yeah.
lots of things going on. That standardization best practice, we all need that, right, to be able to measure what are we measuring, what are we comparing to, what are we pricing to. I know ICE has responded to this in several ways. Can you dive into that a little bit without giving away too much secret sauce?
Yeah, absolutely. When you're looking at issues that really are focused around environmental, social, and governance, you have two problems in the market today. I talked about initially how messy the data is. It's not in structured format. it's not something that is relatable to what an investor would typically consume to make risk management decisions. But also the disclosures that are out there there's a wide variety of disclosures out there. So it becomes a little bit difficult for an investor at the moment to make heads or tails without relying on someone else's opinion as to what risks they really want to measure against. Some people may feel more strongly about a firm's greenhouse gas emission score. Some folks might feel strongly, again, within the same realm, talking about good board governance and diversity representation and pay equity and those sorts of issues. We announced a partnership earlier this year with Bank of America where we're just going to focus on collecting as much publicly available data that companies and municipalities and local governments put out and turn that into what we're calling a reference data service. The way I like to phrase it, we're actually showing firms their ESG footprint in the market. We're looking at things like corporate sustainability reports, filings that they need to do quarterly and annually, being a public company, things of that nature to bring to market just underlying information, high quality, reliable underlying information that then firms could layer in an opinion upon. Bank of America is using our data, for example, to create their ESG meter, which they've now rolled out to 3 different sectors with more sectors to come. And we're in the process of rolling this data set out globally. Since you mentioned that I have the privilege of standing in our affiliate New York Stock Exchange's presence, this data set is something that the New York Stock Exchange is making available to their public company ecosystem, allowing those companies to look at, well, here's what the ESG footprint you've put out to the market. Is that right? Is that not right? Here's how each of these elements compare against your peer group, things of that nature, which at the end of the day, we think is going to lead to better disclosures and more informed disclosures by the companies.
Well, and I got to go back to the floor of the exchange behind you since we brought it up again, and the wonderful work that your team has done, and having the Nest Summit highlighted up there really makes us all so happy. So I have to give a shout out there midstream, Lynn. But when you talk about the data sets, the things that ICE is doing, and you look at some of the rating systems that are out there currently, what's the big differentiator? How are you achieving that, what you're doing?
Yeah, no, that's a great question. And when we were looking at going to market, we didn't want to come out with yet another rating, which would be an opinion. We're more focused on not providing an opinion to the market. We're most focused on providing that underlying high-level, detailed, granular, accurate, timely information that's understandable by firms. When we were coming out with our ESG data offering, I actually spent and continue to spend quite a bit of time with our head of sustainability at ICE, really understanding where her pressure points were, alongside asset owners, asset managers, banks, to understand what their pressure points were in the market and why there was such a variety of opinions based on the ratings in the market. And it all came down to the one consistent answer, which was the underlying data had problems. There was no one really collecting that underlying data and checking it for accuracy with timely updates, allowing a robust querying process. And these are things that we just do in our normal day-to-day, so we have a ton of experience in. It's really what led us to roll out the offering that I just mentioned on the reference data side earlier this year.
Well, it brings to mind the old adage, garbage in, garbage out. If you have bad, unstructured, faulted data, the outcome can't possibly be good, right?
Yeah, that's right.
Lynn, as we close out here, ESG continues to evolve, iterates, gets more scale. Any other innovations that you want to tell us about from ICE, things you're excited about?
Yeah, I mean, I already touched on our climate risk, which we're super excited about, again, starting with municipalities, our ESG reference data. But quite honestly, I think this is a space that is rapidly evolving. The reason I think that is, for the first time earlier this year, in the height of volatility, you saw that ESG data was an alpha generator. There has been a variety of opinions out there prior that ESG data, was it an alpha generator, was it not an alpha generator? And in the first quarter of this year, you saw traditional equity funds have outflows of more than 30%, while ESG benchmarked funds had inflows during that same period. You see the performance of those funds very much varying. The traditional equity funds had poor performance, the ESG equity funds had quite good performance. And Bank of America had just put out a recent research study saying the E in ESG, the environmentals, the climate risk, those types of things, the companies that scored best in that category in particular really drove that outperformance. So I think this is a space that is now going to even further accelerate now that the market understands that these metrics can be used for alpha generation, particularly in times of stress. Aside from our base data offerings, indices are a very, very important part of the growth of passive funds and gaining in popularity on the ESG side. We now have about 50 ESG fixed income indices. We have a full suite of carbon indices, which we brought live to coincide with Earth Day earlier this year, which measure global carbon markets as well as regional carbon markets and emissions on a real-time basis. So we're super excited about that, but I wish I had a crystal ball because I think this world is going to continue to evolve for many years to come.
Well, couldn't agree with you more on that, Lynn. The signals are so strong for ESG. What you're doing at ICE and bringing the analytics, the data, tool packages for alpha capture and creation, just extraordinary. Wanted to thank you so much for joining us today, and thank you for the support from ICE, NYSE, for the Nest Summit, and of course, Climate Week New York City.